What is good, gang? Long time no talk. Good to be back, but let's get into it. So, today I'm going to be inviting you guys to join how I've been supplementing my journal, um, which are daily recaps and weekly recaps. When I do my weekly recaps on Friday, I get a little more intimate like I would on a daily recap for the day of Friday. So let's dive into it. It's been a very long time since we've talked last, so I want to get into what I'm looking forward to engage, so you guys kind of have an idea of what I'm using. So manipulation, projections, standard deviations, nothing new. Key times, SMT, breakers, and anticipation entries, which I'll get into, and then pretty much everything I'm doing is based off the 15-minute chart. If I'm taking entries on a lower time frame, it's only because the 15-minute gives me the logic to do so. Now, earlier I mentioned key times. Pretty much what I'm looking for is 8:30 manipulation, 9:30 distribution, 10 o'clock reversal, or reversion to the mean. If 8:30 doesn't manipulate, I look for 9:30 to do it, and everything just gets pushed back a extra hour. But let's get into it. So Monday, we open up with a range. Here's our opening range, as we can expect logically on Mondays. Opening range, deviation for London Open, and then we pair higher London close. Right. So the times for this day were off for me. A little bit outside of the times I'm looking for these trading signatures, but it checks all the boxes of how highs and lows form. So, what do I mean by that? We have a tap above the high here, tap above the high, false displacement lower. Here's your breaker block candidate. Here's your order block formation with your inverse fair value gap. So we have a nice clean candle body above the high, and then we displace through all of that, leaving behind fair value gap. So back into the range below both fair value gaps. This is a clean short idea. Now measuring the daily manipulation, we reached -4, 4.5 standard deviation, so that move has completed its run. Now, Tuesday, CPI. Like most of us, I was looking for this low to get rated. Prior CPI, give us some sort of bullish signature to ride this higher, because I was very bullish on the week. Now, NQ was the only asset not to take out this low. Here and here, ES and YM did it. So we moved the SMT, confirmed the 15-minute breaker block, A15 I entered long, target was the previous day high. Now this is where most people got involved. We had data low SMT, the 8:30 candle. NQ was the only one that took it, which is important to note because NQ is the only one that didn't take the lows here, so it needed some sort of liquidity, which is what it came back for. Now, to my regret, I didn't participate in this long, even though it being very clean, because the breaker on the 1 and 5 minute was about 100 points. There was definitely enough meat on the bone for that move. I just tend to shy away from breakers that size, even though I shouldn't. It tends to cost me money. Now, going into Wednesday. I was looking for sells. Now, why was I looking for sells? I'll give you guys some logic. So this black line right here, this is the previous all-time high. You have your daily close right here. So we just put a fat candle body on the daily time frame above the old high, right? So I'm looking, how can I logically frame continuations? Now for me, what that looks like is a fair value gap, SMT, and a continuation. So that's what I was looking for. I wanted to see a small range candle following CPI. Large range makes small ranges. Large range. So I had to have bullishness and bearishness, and I also wanted to be closing within striking distance. So I wanted a doji. That was the framework I came in with on Wednesday. Now, Wednesday I didn't really execute well because I was getting rushed off the charts to go see my niece, which, there's more important things than the charts at times. But I got pretty much everything I wanted. I was looking for shorts out of the 4.5 standard deviations. We dug a bit higher into the breaker standard deviations, 30 points above what I was looking for. But the time was all correct. 8:30 there was no news, so 9:30 manipulated higher. 9:30 put in the high. We started creating SMT between 9:30 and 10. This range on the 15-minute looks pretty clean, but on the lower time frames it's actually really muddy, and decels. So cool. Didn't take any trades on Wednesday. No sweat off my back. I should have gotten some of the shorts, but it is what it is. Moving on into Thursday. Thursday is kind of where I, undone myself for the week. I don't often trade outside of the AM session or pre-AM session, but in this scenario I did, and I would take these trades again. But let's get into it. So this was the trade. It fit the logic I was trying to frame for my continuations long, which was I wanted daily low SMT. I wanted to trade into the fair value gap, and this gave me the means to do so. Projections landed right on the liquidity. So by all means, besides the time, this is a great time to trade. Also, relative to session open, we just, kind of manipulated, just traded higher into liquidity and displaced lower. So for me, this was a good trade to take. Now, unfortunately, NASDAQ came, stopped me out, 8:15, no sweat off my back. I did take another trade here on the lower time frames, with a stop right above this high, or like a point above this high. So I got stopped out 4 ticks below the high a day, and then it dumped straight to -2, which is where my take profit was. Partial here, take profit here, on my second trade. So I'm not upset with the trade I took that day. The only thing I would notate for myself would be the stop size I used on that second trade. Here it made sense that I had a 15-minute breaker. I didn't have that on this trade, so that stop should have been somewhere around here, whether it be the order block above the breaker block low. That's where it should have been, at least above this fair value gap. I got greedy, so that's what cost me that trade. So 0 for 2 at that point in time, and I did take a third trade. So we did have previous daily low, SMT, then we also had data low SMT here. So for me, these two things are very important. When I'm looking to trade, I trade this pattern very often, but this doesn't fit my criteria. One, because of the time, 12 o'clock, 13 or 1 o'clock is not really the time I like to trade, not really a time I have success with. Also, this isn't a breaker. This is a mitigation block because we didn't make new lows here. So this isn't a good trade to take for me. I was kind of revenge trading, trying to impose myself. So I actually went 0-3 on Thursday. Friday is where I got back in tune with the market. So let's dive into it. Overnight, what did we do? I reflected on, previous day price action. We traded lower, getting into the retracement or reversal standard deviation projections from the old breaker. Tapped into the old breaker after confirming it. We've never done that yet. Traded up into 4.5 standard deviations of the daily low. Also making previous day high SMT. Once we did that, we confirmed a 15-minute breaker with displacement. Now this is about when I woke up, around 7 o'clock. Around 7 o'clock, I see the 6 a.m. candle open, just trading higher, took the projections of the 6 a.m. candle. Negative 4.5 landed right on the 15-minute breaker. One account took a trade on this candle, tagging it up here, 7:15. Now I was expecting 8:30 to kind of just take us there, down here, so we could long. And 8:30 was kind of a dud. Created an outside candle, which we consolidated in for a substantial amount of time. When I see a parent candle like this, where we have a sequence of inside candles afterwards, I'm looking for that as a range where one side gets ran, the other side gets targeted. So I was looking for the highs to get ran and then target the lows in the direction I was already looking for. So my other account, I put a limit on the breaker, stop at the high, partial at 2, full TP at 4. Standard deviations executed beautifully. There was something wrong with the bracket, and this one didn't close out -2, so I just closed the whole thing. Wasn't even going to deal with it. Closed the whole thing on both my accounts at -2 standard deviations. And then my second trade on Friday, this isn't necessarily a good long opportunity because there's no candle bodies below this liquidity. So for me, I'm looking at this as a retracement to go short again. Didn't take that short though. Would have if we retested the previous range, which we didn't. Anyway, here we have a breaker prepped, up close candle, swing low, swing high, body candle, closure below liquidity after reaching all of our projections, -2, -2.5, -4, -4.5, trading into a daily order block, weekly open price, all that jazz. I took a very simple 5-minute CSD entry right here and just targeted a 2-to-1 for my entry, which was about halfway down this wick, if it'll let me do it. This magnet, do it manually, about halfway down the wick. I just know -2 is right below the previous weekly high, around there. As I mentioned earlier, previous weekly high is the black line. So the black line is a logical place to take profits at. Also, it's -2, so 2 bar. And that wrapped up my day. So I did end the week green with my trades on Friday. But it could have been much better had I had better placement or judgment on Thursday and didn't miss Wednesday. But it was nice to get on and do this with you guys. This is kind of just what I've been doing to supplement my journal. It was nice to share it with you. Nice to be talking about price publicly again. It's been a very long time for that. But that's going to be it for me today, boys. We will talk soon.